Warren, there's a lot of discussion right now about shorting in regards to GameStop and some kind of unprecedented behavior that's been happening in regards to that. What is shorting?
Yeah, so it's a great question. So effectively what shorting is you're putting a bet on a company and you're saying, I feel confident that the company's share price is going to go down in the future. So if we take a really simple example, maybe in January, what we do is we go borrow the shares from someone who owns them. And in January, we sell those shares. And then we promise in July to the person that we borrowed the shares from that what we'll do is we'll give them back their shares. And so what we're going to do is in January, we're going to sell the shares. And then in July, we're going to actually have to go buy the shares. So as long as we're right and the shares go down in value, we'll be able to sell the shares high in January and buy the shares low in July. And so it works and we've made money. There's a very famous quote in the investment industry, which is the market can behave irrationally longer than you can be solvent. And that's what's going on right now, is the market is behaving irrationally and pushing the price of GameStop up. And the people that are short the stock are having to cover that position. So they're having to buy those shares at an extremely inflated value. And as they're having to do that, it's actually pushing the share value up anymore. So we brought up a little graph here. The green line is GameStop's share price going all the way back to its beginning. And you can see it starting to shoot straight up here. So it's a very unusual situation. There's very few shares of GameStop that are available to trade. So if anyone trades those shares, it's pushing the share price up very, very quickly. It's an unusual situation. It has the Securities and Exchange Commission in the United States concerned. And it's unfortunately, we've moved from investing to speculating or gambling in this situation, because the only way that you can make money in this share right now is if you're capable of selling it to someone else at a higher price. And that's becoming riskier and riskier as time's going on here. So unfortunately, this won't end well for some people. The way this will end, you want to think of playing a game of musical chairs. So eventually what's going to happen is, as the share price starts to come down, there's going to be less chairs than there are people, meaning that there's going to be people that are going to want to sell their shares and there won't be buyers eventually. Someone's going to get stuck holding these shares and it's going to end very badly for them. So I would strongly caution people to be very, very cautious with this. I know it looks fun on the way up, but what we know is on the way down, there's going to be some people that are harmed.
Okay, so what happened? Like, how did that graph go from being pretty consistent over the years to that sudden spike? Like, there was discussion on Reddit. Like, what was the action that people were taking to spike that stock?
Yeah, so that's a great question. So we're entering a bit of an interesting phase here where there was a professional group of investors that looked at GameStop and decided, like a company like it, or maybe Blockbuster, didn't have a long runway anymore. So they had put short positions on GameStop. Then there was a group of amateur investors who participate in an online community on Reddit, and there started to be conversation that there was a very thin amount of shares being traded and that they were over traded from a short position. So once this group of people started en masse, and this is millions of people, once they en masse started buying a few shares of GameStop, there's just not enough shares to go around. And so the share price goes up dramatically. It's supply and demand. So we've got a lot of people trying to buy very few shares in a very short order. And this is what you see the end result of.
So yeah. So what are you doing with your GameStop shares?
Because we invest for the long term and because we analyze fundamentals of companies, unfortunately, we wouldn't participate in GameStop in any way, shape, or form. So this is one of the things that we would try and caution our clients to be careful of. A lot of times when we talk about making the big mistakes, this can be one of those situations that could be the big mistake.
That's a great breakdown of that, Warren. If people want more information on all things financial, what's the best way to go about getting in touch with you?
Yeah, so you can take a look at our website. That's Value Partner Investment Council, or VPIC. You can email me at whope@vpinvestmentcouncil.ca. And you can also reach us on phone at 306-773-2862.